Hello, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Okay, thank you so much for being here on time today. All right, say if you can hear me loud and clear, please say a hi to me in the chat box, whether you're watching this on YouTube or on Facebook as well. Okay. Say Rosalind, hi Dave, okay, Alan, all right. So once again, thank you so much. Okay, I haven't been doing my live stream, I think, for the past 2 weeks already. So this week is the third week as I'm doing right now. Okay. Okay, so because last week was, I think previously was Children's Day, then after that was Deepavali holiday. Okay, and now of course, third week already. So I hope you guys miss me, okay? But I think, the market has some changes, okay? For those who are members with me in SVI, I think you still get the same data, I mean the content as well, okay? Anyway, yeah, say hi to me, okay? Karen, Gilbert, Geraldine, Shah, all right, thank you so much. Okay, I think there's something on the right-hand side of the screen where you can see the chat as well, okay? So before I kickstart, okay, just want to share with you what I have been doing, okay? So I actually just came back from Sydney, okay, Sydney. So it's not for a pleasure trip over there. Okay, it is more for a work trip. So we MarketWise Asia, we organize a conference, okay, for the StoneX Forex.com, okay, Australian team there. So we held an event there, okay, inviting Adrian and also Alex Kozulin, okay, to speak, just to share with you some of the photos. Where is it? Is it over there? Let me see, where is the photo? Okay, maybe let me just share first. This one, is it photos? Over here. Okay, so it's just something outside of trading now, okay? I hope you don't mind me sharing because I think it's quite interesting, okay? All right, so we were at the StoneX, wait, I haven't shared my screen yet. Sorry about that. Okay. Okay, so this is the StoneX office in Australia. Over there, maybe some interesting one. So we met up with some of the traders. So this is Adrian Reed. This is Alex Kozuli. So he is a day trader, and the rest, okay, it is actually from the Aussie Forex.com team. Okay, and maybe just want to share with you, very similar. It is pretty much similar to the one that we organized in Singapore. Okay, so this is the thing. Okay, then you can see over here. Okay, so people doing their stuff. Okay, to be really honest, okay, it is a little bit tough, okay, to organize event in Australia because there were some very tight rules and regulation. In fact, last year they didn't really so-called limit our so-called the way we do ads, but this time around we can't really do Facebook ads lah. So some so-called a little bit of difficulty, but nevertheless the crowd turnout, it is still pretty okay. Okay, so eventually it turned out to be a successful event. So this is what we do. Okay, all right. So and also in fact, so just to share with you also, I also climbed this Harbour Bridge, okay, bridge climb Sydney. So I went to Australia, Sydney. It was a 7 hours flight. So by the time we reached there, it is about 7 a.m. in the morning. But okay, Singapore time, okay, Sydney is 3 hours ahead. So in fact, when we reached there, it is about Singapore time, about 4 a.m. Okay, by right, most of us should be still asleep. So we were actually very tired, but we also can't really check in into our hotel, okay, until 2 p.m. Sydney time. So we spent quite some time, okay, outside. So it was pretty tired. And this climb was about 3:45 p.m. Sydney time. So we didn't really have much rest. Check in the room. After that, we have to head out already. But nevertheless, it was quite fun. You see, behind it was actually the Sydney Opera House lah. Okay, so this is the group that we have. Okay, only two of us, Elena and I, were Asian or Chinese. The rest are actually Angmos lah. Okay, all right. So this is the Sydney Harbour Bridge. So we climb the whole bridge to the summit, to the top. Okay, so this is the view from at the top over there, and over there you can see the Sydney Opera House. And over here, this is actually the botanical garden over there, in case you are not aware, okay? So this is my personal shots over there. Pretty overall, quite interesting, okay? So yeah, so this is the shot over there, okay? Yeah, so this is just a personal update of what I do, okay? All right, so for those who just joined, okay, can you please say a hi to me in the comments, okay, if you don't mind. So if you're watching this on YouTube or on Facebook, okay, please say a hi to me in the chat, okay? Let me just head over to the... All right, so let me kickstart this session right now. Hello, Jean, Hadley, okay, Yuan Lam, David, okay, Y Lam over there. All right, so I hope you guys miss me, okay? For those who are not SVI members, okay, like I mentioned, okay, I haven't been doing my live stream for the past 2 weeks or so. All right, Richard, Sungreat, okay, ZZ, okay. So as usual, a disclaimer first, whatever I share today, it is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. Whatever I say, okay, I will not ask you to buy or sell. So whatever decision that you intend to do, okay, it is entirely yours. Okay, don't say, Alex say buy this, Alex say buy that. I will never say that. All right. And so in case you haven't followed us, okay, these are our social media links over there. Okay, this is the one that we have, okay. Just click on this link, the Facebook, Telegram, YouTube, TikTok, X homepage, and also the on-demand webinar. It is all there as well. I'll post the link in the comments over there. So in case you are watching this on a desktop, you can actually scan this on your mobile phone as well. Let me maybe just remove the comments here. I think yeah, come to the screen. Are you able to see my screen clearly or not? How come it looks a bit different right now? Okay. Can see, right? Any difference on your screen? Because just now I got some issue on my screen. On your screen, okay? Okay, can now? Okay, okay, fantastic. Let me just continue right now. Okay, scare me. Okay, I thought something happened to my screen. All right, so this is the social media pages over there. All right, so before I go into the content for this week, also just to share with you for this week wise, let me zoom out this screen. Okay, for this week wise, the economic data for this week, okay, the main thing will be still the FOMC meeting, okay, meeting. All right, can see over here only this coming Wednesday, Singapore time past midnight, that's Singapore time Thursday, 2 a.m., the FOMC meeting. So, you know, it is more or less, they will reduce the interest rate by 0.25%. So today, Tuesday, Wednesday, and Friday don't have much news. And also the US government, it is still in a shutdown mode. So there are also certain news or data won't be available publicly for now. Okay, all right, so let me go through my content first. Is it over there? Okay, so you can see the screen over there. So for the first part, I will go through the macro data, okay, and also general view, okay, just to let you know where are we right now and some interesting information that you might not know, okay, and after that, I'll go into the so-called the technical aspect of the chart, okay, all right, trading wise, all right, so 3 years in, so where does the bull market go from here? So right now, we are into the 3rd year of the bull market, okay. So how many of you remember, all right, when was the bear market, okay? Can you remember how many years ago, or tell me the year, which year was the bear market, okay? Just, you know, entertain me a little bit, share with me your answer in the comments, in the chat, okay? Hi, Bernard, hello, Arden over there. Right, when was the bear market? I already said 3 years in already, right? So you should know, right? So this year is 2025. Some grade say the 1922, the Great Depression. That's the Great Depression. Okay, the answer is actually 2022 lah. Okay, the answer is 2022. Okay, so that was the buy market. After that, 2023, the first bull market. Okay, first year. Then 2024, second year, and 2025. This is the third year into this bull market. So continue to rally, okay, to climb the walls of worry. Okay, every single year it is not very smooth sailing. There's always something worrying, okay, for you to worry about. So it's defined skeptic, and so called right now is the return for this year is also quite good now, okay, since 2022. All right, so the bull market turned straight and it is still climbing. So in case you are not aware, okay, since 2022, okay, the S&P, it is up 90%. So if you add in the dividends wise, okay, it is actually 98%. Okay, it is as good as 100% gain if you did not sell anything at all, okay, in 2022, and for example, you invested in the index, specifically the S&P 500. So while there's ongoing China tension, tariff, slowing labor market, and of course, recently people talking about the AI hype, the valuation concern. Okay, all these are adding to the investors' anxiety. Okay, but okay, the market has been pretty much resilient, and right now there is no imminent recession, and the Fed, it is still not tightening very fast. Okay, this bull market could okay extend well into 2026. Okay, so this is the 3 years mark over here. Okay, so how this bull market stacks up. And by the way, in case you are not aware, the average duration for a bull market, it is typically 5 years over the past 80 years. So if you're talking about 5 years, right now we are just into the mid-cycle of this bull market. If of course the question is if, okay, the bull market, okay, really goes on to be average, okay, into about 5 years, then right now it is about the halfway mark of the bull market cycle. And historically, okay, bull market gain about 200%, okay, on average. Right now, we have already done around 100%, like I said, around 100% with dividends, okay. So if another two or three more years to go, then average about 200%. So in current status, as I mentioned, is mid-cycle. It is neither young, okay, or mature. So historical patterns just imply that there are more upside potential, okay, if economic growth and earnings momentum persist. Okay, so this is the strength and length of the bull market. So to give you a more of a better visual over there, so this is into the different era of the bull market over there. If you can't see the dates, never mind, okay, right? All these are the various bull market length. So just to let you know, the red one that you are seeing here, it is actually the current one, okay? From 2022 October was the low of the bear market, and then the market just rally on, okay, from 2022 October onwards until right now. So right now it is over here. So if you're comparing to historical bull market, okay, we are still, quite in a way quite young, but average, okay, it's about halfway mark. Okay? If you're talking about average is like that, then we are about the halfway mark. Okay, everything clear so far about this bull market? Okay, if you are clear about this on this bull market, type letter B in the comments. If you're watching this on Facebook or YouTube, if you're watching this on YouTube, do give me a like and subscribe as well. Watching this on Facebook, if you haven't followed us, do give me a follow as well. Okay, thank you, Alan. Thank you, Hadley over there. So the average bull market return per year. So you can see that, these are the various bull market cycle. Once again, if you can't see the exact dates, doesn't matter. Okay, doesn't matter. All right. So you can see over there from 2020 to 2022, the average return per year, okay, for the past 2 years, it is about 53%. So it's talking about the cycle. I mean, that within that, 3 years bull market, 5 years bull market, 7 years bull market, that kind of thing. So for example, in here, okay, 2022 to 2007, that is the bull market after the dot-com crisis, okay, about 5 years, the average return about 19%. So from now until from 2022 until now, it is about 29%. So average is about pretty much average also lah. About the average is about 30% mark. Okay, right now it's about 29%. Of course, during the COVID, after COVID, that was an exceptionally good returns there, about 53% per year. Okay, all right. And talking about inflation, okay, right now inflation, it is not a issue anymore, at least for now. Okay, I mean it is still there. It is pretty much sticky, persistent, but it doesn't really cause much of concern. Okay, if I'm talking about the September CPI, okay, it is both below the forecast. Okay, the 0.3 month on month and also the 0.2% core CPI. Okay, both are below the forecast. And like I mentioned, the October meeting, the Feds are expected to cut rates to 3.75% to 4%. Okay, and as we wind down into December, into the end of the year, there is another potential rate cut over there. So let me just exit this screen over there and head into this CME Fed Watch 2 over there. So you can see over there, okay, the next FOMC meeting, it is in 2 days time. Okay, how come it's not showing anything over there? Let me try to refresh the thing. Okay, so you can see over there on the 29th of October, 2 more days, this coming Wednesday past midnight, Thursday morning, early Singapore time. Okay, current rate it is 4 to 4.25%. So let's assume it's 4 to 5. Okay, we are cutting rate to 4%. So it is a reduction of 0.25%. Simple maths, easy maths. Okay, all right. So it is as good as 100%, 96.7%. Okay. And subsequently, okay, let's say if really cut to 4% already, okay, what is the probability that the Fed will cut, okay, another 0.25%? So it is as good as near 100% also, okay, to 3.75%. So as of now, 27th of October, okay, the probability based on the futures market, it is about 94%. So we can say that safely say that, okay, most probably the Fed will cut rate, okay, in this coming FOMC and into the end of the year, 10 December FOMC as well. So two cut rate in total will be a 0.5% interest rate cut. Okay, all right. So this is the one that I'm going to show you back to the screen. Okay, so I was previously here. Okay, so the Fed's journey back to neutral is picking up steam. So this is the blue line, is the headline CPI. You can see that since the 2023, okay, after the inflation has dropped drastically, the inflation is pretty much sticky, about 2% to 3%. So the Fed policy rate hasn't been really catching up. So it's like going to catch up, okay, into the late 2026. But this is what it's their plan moving forward into 2026 as well. So they'll continue to reduce the interest rate, but not drastically, okay, bit by bit, okay, unless the economy deteriorated also, okay. So what are the potential things that could lead, okay, the stock market, okay, the indices to go higher, okay, the next leg higher? Of course, right now, valuation pressure, okay. So of course the AI thing, the companies, okay, based on the AI, for example, the big tech, okay, the valuation, it is quite high, okay. So the analysts cannot keep, or the PE private equity guys cannot keep, doing the valuation higher and higher, okay. All right, so they have to shift the focus to earnings. So there must be some fundamentals. It's not like the dot-com bubble, okay, where companies do not have earnings, okay, and because it is a .com, okay, domain, and they just drive up, okay, the valuation and the stock price and the PE ratio at that point in time, okay, was ridiculous, okay. But this time, okay, it's a difference in the sense that, okay, companies, especially the big tech, okay, even with the AI component inside, okay, they are still profitable, they are still making money. So that is the key difference. All right, and the strong performance, okay, we are third straight year of double-digit returns. It is actually quite rare to have 3 consecutive years of double-digit return in the indices. Okay, And talking about the Q3 momentum, all right, 8.5% growth overall. Okay, the Magnificent Seven leading at about 15% plus. Okay, so as corporate profits and AI investment rise, fundamentals, okay, should lead the next phase of the bull market, as long as the company continue, okay, to have profits. Okay, I think, okay, the stock market still have legs to go higher. Okay, so Q3 is poised to mark the 9th straight quarter of earning growth for the S&P 500. You can see over there during the 2023 there was negative earnings growth, and after the Q3 of 2023, okay, the earnings growth is actually positive. But you can see that even though the earnings growth seems to decelerate, okay, like 15%, 13, 11, 10, 9%, but overall it is still positive. Okay, it is still positive wise. All right, so, and just to let you know, so, okay, AI, okay, it is, people say that it is in a bubble. Okay, whether it is in a bubble or not, okay, we don't know yet. Okay, but okay, spending is definitely a lot. Okay, all right, the spending is surging towards 400 billion. That it is about 1/3, okay, of the total S&P capex. Capex stands for capital expenditure. Okay, right, so 1/3 of it is into AI spending. Okay, all right, so the capital spending of Amazon, can see that for this year, estimated for 2025, okay, 394, okay, it is about 400 billion. So the analysts are estimating that in 2026, okay, you increase to 450 billion, okay, and then in 2027 to 500 billion, okay. I think most probably in AI spending. All right, so even though the market continues to go higher, so there are some potential, okay, risk and volatility out there. In case you're not aware, okay, all right, okay, I'm not a permanent bull. Okay, I'm thinking that it's always going to go higher. But of course, there are groups out there who are always permanent bear. Okay, but I am not, neither here nor there. Okay, I'm not permanent bull or permanent bear. Okay, but just let you know, okay, the S&P hasn't seen a 5% pullback in over 100 days. So right now, okay, it doesn't mean that it won't happen. Okay, okay, just that when it is a matter of when it will happen. Okay, it will be in this month, in November, in December. Nobody knows. Okay, no, but we must be prepared for that. Okay, so this is something that you must be prepared for if you are trading the market or investing in the market. Okay, eventually, okay, a 5% to a 10% drop, it is normal. Okay, it is a matter of when. Okay, all right, Ken. So the key catalyst ahead, okay, will be recently there will be the earnings are coming out soon. Okay, and of course the US and the China talk. Okay, that's coming up. Okay, Trump and Xi Jinping is meeting on the 30th of October, if I'm not mistaken. That's just another 3 more days. Okay, all right. So as of now, okay, companies are still making profit. Fed is easing. There's still okay and ample liquidity. So as of now, okay, it does suggest that whenever there is a correction or pullback or even a steep correction, it is a good chance for you to add into your position, at least for now. All right. So the key takeaway from what I have talked so far for the past half an hour or so, right? Okay. So number one, okay, the bull market has turned 3 years old. So 90% up since 2022. Okay. It is strong, but as of now, it is still the halfway mark of a bull market. Typically, I mentioned, bull market typically lasts average 5 years based on the past 80 years or so. All right. So cooler inflation, easier Fed, okay, wishing that Fed it is easier for them to reduce the interest rate, okay, right now, okay, and moving forward, okay, the valuation cannot keep on going higher. The earnings have to take on the baton. So as long as the companies are still making profits, okay, and it is all good for now. All right, and positioning for broader leadership, okay, I mean that in order for the bull market to continue, okay, not only that the mega caps have to going high, okay, going higher, okay, the mid cap, smaller cap, all these cyclical healthcare, okay, all this they have to go higher as well. Okay, So this one 90%. This is just this is the summary now. Okay, I mentioned inflation is cooling, the rate cut begins. Okay, QT wind down over there. Okay, and then there's a lower risk premium over there. Okay, all right. So the earnings growth. Okay, the Magnificent Seven is pushing the earnings growth. Okay, S&P overall it is mid one. Okay, the X tech. Okay, basically it is the Magnificent that is pushing up. Okay, the earnings. Okay, all right. So this one is overall this basically what I've mentioned just now. So the third year marks a transition from momentum-driven gain to fundamental growth. Earnings will play a very important role right now. Okay, all right. So I think that's the end of this third year of the bull market presentation over there, content over there. Any question so far? If everything is okay, all right, just type okay in the comments for now. So if you're watching this, okay, or you just join me, okay, thank you so much for joining. Please subscribe to our Facebook channel, okay, and also like our YouTube post as well. This live stream, if you're watching this on Facebook, okay, do also give me a like, share, and comments as well over there. Very few likes on Facebook. Can give me some more likes or not? There's only, I think, 8 likes on Facebook. I think majority of you guys are on YouTube, if I'm not mistaken. Okay. All right. Wait, I knock off my water over there. Just give me a while over there. Paise. Clumsy me. Okay. It's all wet. Okay, never mind. Okay. Okay. Wait, let me see the comments over there. What international SMID? If I'm not mistaken, it's all the small cap, mid caps. Okay, small mids. Okay, setting up as leadership broadens. Okay. Wow, all wet. My mouse is all wet. Okay. All right. So any other? Why I'm wet? I'm always wet. I can make other people wet as well. Okay. Okay, I'm just kidding. Okay, in case you're thinking too much over there. All right. So let's head over to the chart right now over there. Okay. So before I want to go into the indices, I can just share with you on the gold chart right now. So gold, as you can see here, okay, it is as of now, okay, it is dropping about 3%. This is based on spot gold. Okay, the futures gold is dropping about 3.3 minus 3.34%. So like I mentioned, I haven't been doing my live stream for the past 2 weeks or so. For those who have been following me either in the SV public group or in my SV private group over there, somewhere around here, this is the gold chart. Okay, of course, at the peak, gold was at about 4.4K, there about 4.3K or so. Okay, all right. At the peak 4.4K, it was somewhere around here, okay, that I talked about early August, no, not August, early October. I say that, I think that peak is almost peaking, almost there, because I'm not God, okay, so I won't know when will be the exact top, okay, all right. It is actually very hard to catch the exact top when it is in a mania stage or in a parabolic stage. So if we thought that it's going to go crash already, but it can continue to go higher. So case in point over there, okay, this was when I first mentioned that, gold, it is reaching the mania stage, okay. I think that, almost there, but price continue to head higher. For about another 10%. Then you might thinking, Alex, I missed that 10%. 10% is a lot, Okay, for me, I don't really FOMO nowadays. Okay. In case you are not aware, okay, I have been trading the market, okay, since 2011. So that is almost about 15 years already. And I just want to let you know, okay, 2011, there is also a gold mania over there. So let me just ask you a question, okay? Because as of now, okay, it seems like gold, okay, the peak right now is about 4.4. Okay, I don't know whether it's going to be a short-term peak or mid-term peak or long-term peak, or this is going to be a long-term crash. I don't know. Okay, nobody knows. In case you tell people that, oh, Alex said it's going to be a peak, a long-term peak, it's going to crash. I did not say that. I did not ever tell you to buy or sell. Okay, right? So I have no idea. But okay, just to let you know, in case you're not aware, if the gold market really does correct, and maybe it's going to have a very steep correction, or maybe you can say a crash or whatever it is, okay, how much percentage do you think, okay, gold can correct to? What is the percentage of correction? It can drop how many percent? In simpler word, it can drop how many percent, okay, from the peak? Make a guess. Is it like 10%, 5%, 20%, 50%, 80%, that kind of thing? So the peak is about, let's say about 4.4, okay? Can somebody share with me your answer on the chart? Okay, I think I shared with my private members before, but just for public, okay, just to ask again, okay, how much do you think gold can drop if it is really a long-term peak? Okay, David say 30, Tommy say 50%. Only these two are, the rest all holding gold. Or how many of you are still very bullish on gold? Still very bullish on gold. Okay, it is perfectly fine. Okay, all right, 10%. Adrian says 10%. Okay, I think the rest either you are too shy to say anything or you don't know. Okay, the box says 25%. Okay, right. The answer is okay. All right, based on historical past. Okay, it is about 50%. It is about 50%. Okay, so let's say for example 4.4 drop 50%, so it's about 2.2k. Okay, it can potentially drop to 2.2k, way below this chart over there. Okay, 2.2, it is over here. 2.2, it is over here. Okay, from here drop to here, about that over there. Again, it is not going to be a straight line drop. Okay, all right, it take some time. So case in point over there. So like I mentioned over here, okay, let me do a naked chart over there. Okay, naked chart over there. All right. So like I mentioned, 2011, there was also a 2011. Okay. There is also a mania over there. Okay, can you see over there? So 2002 onwards, okay, not much movement until about 2010. Then 2011, it just went parabolic over there. So case in point here, this is a weekly time frame chart. This is a weekly time frame chart over there. So you might be wondering, hey, how come Alex keep talking about 2011? Simply because, okay, I was inside the mania. Okay, I was inside the mania. Okay, at that point in time, I don't know what is the narrative now. Okay, I think whether it is the US dollar is going to die, it's going to crash, the US debt is too much, that kind of thing. A lot of this narrative, okay, US dollar going to crash, okay, too much debt. A lot of this, the same narrative has been peddling around until now. Okay, so I was sucked into that mania as well. So I also, okay, went to UOB Plaza and go and buy physical gold coin over there. So I also go and queue. So you can see that it is exactly the same scenario you can see on the social media where people are queuing up at Australia bullion places, okay, to buy gold, silver, or in Vietnam, in Thailand, in China to buy gold. So it is exactly the same thing. Okay, so when it happened this time round, okay, it just felt like a deja vu again. So I'm very fortunate that I bought somewhere around here, managed to exit, because I feel that something is not very right. Okay, I think I better exit, that kind of thing. So eventually I exited with zero profit, because when I buy physical gold from UOB, there is a spread. Okay, the moment I buy, I lose money already, because whenever I sell back to UOB, okay, there is a spread. So the prices of gold have to go a lot higher, okay, then I can make a little bit of profit. But overall, I think just minor losses or never lose anything. But I'm just fortunate to have not lost anything. Okay, so this is exactly the same thing. So at that point in time, people were expecting rallying that, hey, gold will go to 2000, gold will go to 2000. Okay, it is inevitable that gold will go to 2000 or go 2000, 2000, 2000, 2000. Okay, eventually, okay, it did not hit 2000. The peak was at about 1.9K. So let's assume it is about 2000 now. Okay, so you can see that eventually, okay, gold, okay, did have a sell-off, steep correction. You can see that, okay, it is not a straight line, so kind of a zigzag, okay, then go higher. People think that it's going to go higher, okay, but it went down lower to somewhere around the low is about 1053 over there, okay, 1053. So you can see over there, okay, the drop from 2K to 1053, it is almost, okay, a 50% drop. Okay, it is almost a 50% drop over there. Okay, so okay, you can see that it took many years, okay, to get back to about 2000 mark. Okay, until about 2023, before this is the year that it finally rallied to 4000. So I just want to ask you a question. Okay, if you are trading, short-term trading, okay, how many 12 years, 13 years, you know, do you have, okay, to wait for it to hit back to 4000 mark again? Okay, so again, I do not know whether gold, I do not know gold, how gold will pan out to be like that, or no range for a while to many more years until it go higher again. So I'm just asking you, okay, are you prepared, okay, to hold gold, okay, for the next 10 years, okay, if you bought at near the peak at about 4000 mark or so? Okay, of course, it can just go down a few weeks and then go higher again. Everything is possible, okay, but I'm just telling you that there is a possibility, okay, gold might not move for the next 10 years or so. Possibility only, okay? You guys understand what I'm trying to say? If you understand what I'm trying to say, just type number 10 in the comments over there. Okay? And again, you know, I'm not God, but based on previously, I was thinking that, hey, you know, this was the first leg that went up over there. So this is like the B leg over there. A, B, C, D over there. So when it hit about okay, about 4000, I also thinking, hey, it is almost there already. It is almost there already. Okay, of course I can't time it to the exact high. Nobody can do that, but it is almost there already. Okay, all right. So again, I'm not sure whether it makes sense to you or not. Okay, and previously I told my members that, you know, based on the weekly time frame, okay, there was also a potential star reversal signal. So again, the potential star reversal signal doesn't mean that, okay, it is going to crash. Okay, and I also won't know what is the magnitude of the drop if there is indeed a drop as well. So you can see that the previous star reversal signal, okay, was over here. So it dropped a little bit, okay. Oops, it dropped a little bit, okay, it dropped a little bit, it dropped a little bit over there. Okay, it dropped a little bit over there. All right. So this is my analysis of gold right now. And if you can see right now, this is the very simple horizontal, just a very simple horizontal line over there. Trend line, okay, what you say a trend line, okay? So this very steep trend line has been broken. I think by tonight, it should break. So if the next few days or so, it cannot go higher up again, there's a very good possibility that it can go down low. Once again, I don't know how low it can go, and it won't go down like that straight also. Like, you know, it will go up, go down, go up, go down, that kind of thing. But eventually, I think it will go down a lot lower. I don't know how low is it, okay? Just to let you know, I don't know, okay? But prior to that, okay, I have already mentioned to my members over there. So for example, if you search for GLD over there, okay, so this is the gold flow. It is the options flow, okay, moderate. It is still going down lower, okay. Can you guys hear me? Yang said disconnected. Can you guys still see me online? If you can, just type OK. Okay or not? Everything okay? Okay, or I think maybe Yang only got problems. So you can see over there. All right, so the goal prior to that, I mentioned that. So this is the 20th. Okay, you can see that, you know, overall it is bearish. So the options flow has been telling me that it is actually pretty much bearish. Again, there are certain options flow that is quite difficult to read, okay, in just the gold itself. So I wasn't actually very sure. So I have to pair into the gold minus GDX, okay, which is also pretty much negative, okay, premium and delta, okay, the directional flow, okay, and also the silver as well, okay, it is also pretty much bearish as well. So we can see over there, you see on TV, there's a mania, it is almost there, okay, the options flow, it is telling me it is also almost there, okay, and in case you are not aware, I don't mind sharing this with you also, okay, in case you are not aware, all right, the seasonal trend, okay, for the gold right now, it is also not the best also, based on the past 15 years, okay, all right. Waiting for live video signal. The broadcast is waiting for a signal. It should resume shortly. I think YouTube should be okay, okay? All right. So you can see over there for the past 15 years or so, okay? Right now, after the mid of October or towards the end of October, all right, we are having trouble on Facebook end. Is it possible the stream was ended or deleted on Facebook? Okay, we'll keep trying, okay? And yeah, I think there is some issue with Facebook, okay? So if you're watching this on YouTube, I think everything it is okay, okay? For those who are, maybe let your friends, if they are watching, let them know that head over to the YouTube link, okay? All right, so this is actually going down since gold for the past 15 years or so, okay, possibly until the end of the year, then there maybe gold will stage a rebound, also a higher possibility of a full-grown rebound. Okay, clear so far? If you're clear, just type letter G in the comments for gold. Okay, for gold. Brownie, are you SBI member or not SBI member? I can share, okay. All right, so these are the ones that I share with my members also. So before I go into Bitcoin, okay, also just to let you know that, you know, SPX, okay, right now, okay, if you add in the usual indicators that I have, can you see that previously, okay, it is still very well supported by the central pivot range over there, okay. Right, once above the cloud, this is the SPX cash index supported by the CPR, supported by the CPR, okay, supported by the CPR, supported by the CPR, okay, supported by the CPR, okay. Angela is asking, since China was also buying gold this season, does that change the typical seasonal performance of gold? Doesn't matter, okay. Don't need to read the news, okay, about who is buying what, okay, and who is buying that one, okay. Since 2011, during the mania, I also read about, you know, India is buying this, that country is buying that country is buying this, they're buying more gold, they're buying more gold, they're buying more gold, okay. Everybody who wanted to buy gold have bought, okay. Then who will want to buy gold from you, okay. And this is also the perfect time, okay, for the smart money, the institutional, okay, all right, to push the gold to you so that you are the exit liquidity. Remember, you are the exit liquidity, okay? You buy so that they can sell to you, and they sell to you so that they can exit, okay? And truth to be told, okay, you most likely a lot of people will be the suckers, okay, buying at this point in time, buying at 4.4K, okay, hoping that you can continue to go 5K or 6K. I mean that Potentially it could lah. If your goal is to just to diversify, have a balanced portfolio, add some stocks, crypto, gold, silver, bonds, then that is perfectly fine. If you want to buy gold, you are willing to hold for the next 5 to 10 years as a diversified portfolio, then that is perfectly fine. But if you're talking about short-term speculating, trading, okay, swing trading, position trading, holding for just maybe a few months or so and then exit, then this is definitely not a good time to buy to go. Okay, this is just my personal view lah. Okay, so the narrative, everything will come out such thing. Okay, so it doesn't matter. Okay, just follow the price action. Okay, and also as of now, the options flow as well. Okay, and it is not looking that good in my personal opinion. Okay, so back to the S&P 500 now. So you can see that this is the central pivot range is well supported over there. So at that point in time, okay, like I think for the past 2 weeks or so, okay, I haven't been doing, but when it dropped on the starting on the early October, I forget what news is it the Trump thing? There's some tariff thing going on. So there was a sharp sell off over there. Okay, all right, and it hit right into the central pivot range. In fact, I told my members that, okay, don't short now lah. Okay, it is too late to short already, and you are shorting into the CPR level, support level. So for example, the Nasdaq, okay, also at the CPR level. Okay, in fact, for the Russell 2000, okay, also into the CPR level as well over there. So don't short over there. But again, at that point in time, okay, I don't want to be like, how sell, tell you that, okay, I know the price will definitely go. I don't know, okay, I repeat, I don't know whether the price will go up or down at that point in time, okay. I have no idea, okay. Lest you think that I'm a guru or I know everything, or lest you think that I'm Tua Pao Xian, that kind of thing. Okay, I really don't know, okay, but I can only see the current situation. If I think that midterm wise it is going to be bullish, then I just place my long trades, set my stop loss level, manage my risk position, manage my risk, and that's it. Okay, and anyway, okay, so it was at a CPR level there. And not only that, okay, you can see that when the market dropped at that point in time, okay, the VIX, okay, this is the VIX over there. I do a naked chart over there. So this is the VIX, okay, so-called the fear index over there. You can see there are actually 4 lines over there. Okay, this is the mean. Okay, this is the first standard deviation, second standard deviation, and third standard deviation over there. Okay, typically, okay, 19 it is the mean, the average value for VIX. Okay, all right, then first standard deviation is about 27, and a lot of time, okay, when VIX hit the first standard deviation, it typically mark a turning point. It mark a low of the correction. So which means the correction might be over there. And there are times where, when there is a steeper correction, then it will hit a 2 standard deviation on the VIX. And typically that will mark a low as well. In case you don't believe me, so you can add SPY over here. Okay, oops, shoot. New pane over there. Okay, so you can see that 2 standard deviation over there. Okay, it is a low, it is a low, this is a low, this is a low. Okay, this 3 standard deviation, this is a low over there. 1 standard deviation here, it is a low as well. Okay, this is a low as well. Okay, all right. So when it hit 3 standard deviation, okay, quote unquote, like this year April, I say that can close eye and buy, that kind of thing. Okay, again, close unquote, I'm just sharing with you the like analogy. Okay, close eye and buy when it hit 3 standard deviation, when it hit extreme fear. Okay, but when it hit 1 standard deviation, it is a little bit unclear, okay, unsure, in a way that it can still potentially go higher to 2 standard deviation, that kind of thing. So I was not very sure, but hit 1 SD, it is a good correction. Okay, and not only that, okay, In fact, if I add in the VIX over VIX 3M ratio over there, okay, all right, you can see that typically, okay, when this reading, okay, hit reading 1, okay, you can see that the shaded purple level over there, it also marked a turning point over here, a low over there. So in this example, okay, it indeed marked the low of the market also. Okay, again, you know, I won't know that it is going to be really a low. I still place a few long trades over there, you know, manage my risk, manage my position over there. Okay, so this is for the S&P 500. And looking at the options flow that I shared with my members over there, you know, the S&P weekly, you know, all these are, it wasn't too bad, okay? The options flow, okay, midterm wise, it is still gravitating more towards the bullish buyers as well. So my view is that heading into November, December, okay, I think, okay, the market should be still pretty okay unless there is some black swan event or unless there's new things that's happening, okay, based on options flow or whatsoever. But right now, in case you are very bullish right now, want to buy everything right now, okay, I just want to let you know that, okay, all right, if nothing happens, okay, by tomorrow, there will be a star potential reversal signal over here. Okay, once again, this star signal, it just tells me that the index is a little bit overbought right now. In fact, using your naked eyes, you can see that it has been going higher already. So it is a little bit overbought and it could be time due for a correction. Okay, so I will not be surprised, okay, after tomorrow onwards, okay, maybe price will have some correction coming down or some ranging movement. So it doesn't mean that S&P, okay, will come down or drop a lot, or what is the magnitude. I won't know what is the magnitude, but just to be mindful that, okay, there is a star reversal signal over there. So you shouldn't be aggressively, you know, wow, buy 1 position, 2 position, 3, 4, 5, 6, 7, 8, 9, 10 position, or 10 long position, okay, 10 stocks position like that, okay. If the market it is going down, then there's a very likelihood that, you know, a lot of your equities position will be hit as well. You get what I'm trying to say? Okay. So if you understand about this potential star reversal signal, just type letter S in the comments over here. So this is the star reversal signal. Potential, it could be coming down, okay? But overall, the market, it is still in a bullish uptrend over there, okay? And also just to share with you here, okay, the seasonal trend based on the post-election seasonal trend for the past 18 years cycle. So this year is the first year of the post-election. So you can see that, you know, typically, okay, end of October starts the favorable bullish period, okay, for the S&P 500. Does it mean that it's going to be 100% true all the time and move exactly like it is? No, it don't move exactly the same. This is just a historical record, okay, to tells us how it moved based on the past 18 years of cycles, okay, averagely how it moved, but it won't move exactly dot by dot, dot to dot, that kind of thing. But typically, okay, end of August is typically more bullish until the end of the year or so, okay? Okay, so this is the S&P 500, okay? And, okay, talking about Bitcoin, okay, talking about crypto. So previously, okay, I think inside the SV group chat over there, this is the public SV group chat, okay? I mentioned about that, is it market updates? That potentially, okay, Bitcoin, based on the daily time frame, okay, could be having a downtrend, okay? So that was what I mentioned previously, I think about 1 or 2 weeks ago, based on the 2-day time frame, okay, price actually coming down, okay? And, you know, that could potentially downtrend unless it reverse back up. So you can see that, you know, it just reverse back down. It doesn't stay very down, as in it doesn't stay there very long and it just reverse back up at some point in time. Okay, the 111 level, okay, marked as a resistance level over here. Can you see the long shadow over there? It came down and continued to go higher over here. Okay, so okay, right now Bitcoin, it is back again above the central pivot range over there. Okay, all right, but you know, moving forward, if price really does come down, then this 111 level, okay, will be acting as a strong support level. Okay, right now we are approaching the end of October already. So let's see where is the developing central pivot range over there. Developing central pivot range. Okay, it is also here. Okay, this is the developing. So which means that next month, where is the CPR level? So I think the market is moving a little bit ahead of itself here. It is resisted at the developing central pivot range over there. Okay, over here. But also, just to let you know, in case you are thinking that, oh, Bitcoin right now, okay, it is going higher, I want to buy right now. Okay, I mean that, okay, it can go higher in due time. Okay, where is it? Let me remove this. Let me do this. Okay, you guys thinking, oh, why Bitcoin is going higher? It is a pure reversal right now. I mean that midterm wise, I think it's still okay lah. But if you're talking about short term wise, okay, within the next 1 week or so, okay, right now, okay, there is also a potential star reversal signal. If nothing happens by tomorrow or so, there is also a star reversal signal over there. Okay, again, it doesn't mean that it is going to crash big time. Okay, and it doesn't mean that it's going to drop. Okay, it just tells us that it is a little bit overbought. Okay, there could be a chance that it could correct or have some pullback also. Again, if it does drop, we won't know what is the magnitude of the drop, but it just tells me that, okay, I need to be a little bit more careful. Okay, if you are trading intraday short term, okay, don't be too aggressively going long. Clear so far? Clear so far on this or not? If you are clear, okay, just type letter B in the comments. Okay, so potentially there could be some pullback or correction, maybe into, you know, into DCPR level or whatsoever. Okay, all right, but based on the options flow, I think midterm wise within the next 2 months or so, I think should be okay. Should be okay. And another thing I want to share with you is that based on sentiment, okay, based on sentiment, okay, I'm not sure about you, okay, you see that Bitcoin, it is at that point in time, it is near all-time high at about 124K or so. But you know, the media, okay, the media did not talk about Bitcoin, did not talk much about Bitcoin. People aren't excited about Bitcoin whatsoever. Okay, it is just like, oh, it's another day. Okay, of course, there's correction. The market also never talk about that. So in that sense, I can tell you that, okay, many people are not inside Bitcoin yet. Okay, a lot of people are not inside Bitcoin yet. So compare this to, like, for example, 2021, okay, 2020, you know, the past previous crypto cycle. Okay, just recall back the hype on Bitcoin, okay, or the hype when Bitcoin first hit 100K, that kind of thing. Okay, after that, you know, go boom, go 100K. Then there's a lot of media talking about Bitcoin. Then after that, Bitcoin immediately dropped already. Okay, it took a while, okay, before Bitcoin started to recover again. So once it recovered, nobody else talk about Bitcoin already. So even though as it is somewhere near the all-time high again, but nobody talks about Bitcoin. So in that sense, I think that there is more upside. I think, okay, don't say Alex say I tell you to buy, because there will be some idiot who will tell me that, oh, Alex say can buy this, Alex say can buy that, can sell that. So no, don't be that idiot. Okay, all right, I'm referring to somebody else idiot. Okay, not you. Okay, not you. There's one idiot out there. Okay, all right. So so this is yeah. So in that case, I think that there could be some more upside to go. Okay, so yeah, this is my view on Bitcoin. So it is very different, okay, from the gold as well. Gold, you can see that, you know, like I mentioned, there's a lot of hype media talking about gold, etc. So you know that the time is almost there. So the case, it is also the same for stocks. Okay, as the market continue to go higher, the market continue to go higher. Okay, nobody really talks much about stocks. Okay, your uncle, auntie, whatsoever didn't talk much about stocks. Okay, and recall back in 2021, just right before the bear market. Okay, at that point in time, people are talking about stocks, that buy growth stocks, FOMO, if you don't buy, you are an idiot, that kind of thing. Okay, so right now the situation is a little bit different. Okay, it's a little bit different right now. Okay, and in case you are not aware of my SVI members, based on the screen. Okay, for example, I do have, like, for example, a screener. Okay, you should share with you what to screen for based on seasonal data. Again, these are just examples. I'm not telling you to buy or sell. These are just triggers. It is not a buy and sell signal. Okay, I just share with you one example how the bot works. Okay, so share with you, these are the things that comes out. Okay, these are things that comes out. Okay, you can take a look at all this. Okay, whether you want to enter or not. Okay, and it is based on seasonal trend above 50 MA. It is in the uptrend, that kind of thing. Okay, so for example, over here, like the signal, once again, the signal like this, it is based on the trigger from the bot over there. Then I share with my members over there, like, okay, what is something looks interesting to me, for example, over here. Okay, you can see that, for example, like previously, most recent one, for example, is like this cloud computing. So I first mentioned on the 15th of August over there. So this is based on the seasonal data. Okay, 13th October to 25th of November. Once again, these are just pure facts and data. Okay, I'm not asking you to buy or sell. Okay, all right. I'm just showing that, hey, this looks interesting to me. You can put it in your watch list. This is SKYY. This is cloud computing ETF over there. So you can take a look at SKYY. Okay. All right, not too bad, right? Okay, 8th of August, it is somewhere around here. Okay, is it 8th of August? Oh no, 15th of August. 15th of October, sorry. 15th of October. It is somewhere around here. Okay, all right, then after that, go higher, that kind of thing. Another one that I was looking at was actually the XRT. This is the retail ETF. Based on seasonal data, it is also not too bad also. Okay, this is just example of what the screener will do lah. So again, whether you want to enter or not, you still have to make your own decision. So it's a bit ranging right now, but overall it is still okay. Okay, all right. So this is just a showcase of what the bot does. Okay, I do some options flow. Okay, seasonal trend. Okay, the screener from the bot as well, etc. Okay, all right. So I think I've come to the end of the my live stream. Okay, any other questions so far? Just nice, about 1 hour or so. Okay, basically, okay, summary, I think that gold, okay, there could be some more downside to gold. Okay, but it will not be like straight line 90 degree down lah, but I think that some more downside to gold. Indices, okay, there is still more upside, but be aware that short-term wise, there is a star reversal signal. Okay, star reversal signal. Okay, all right. Aden, you are my SVI member. Okay, you can go and read through my video lah. Okay, basically, I think short-term wise, Hong Kong still okay. Okay, Hong Kong still okay. Short-term wise, Hong Kong still okay. Okay, go and read through the summary or watch the video first. Okay, any other questions so far? And if you find value in today's session, especially if you're on Facebook, I don't know whether Facebook is still okay right now. If you're watching on this Facebook, do give me a like or share. If you're watching this on YouTube, okay, do give me a like as well, subscribe to my channel as well. And if you find value in today's session, okay, just type letter V or type value as well. Okay, all right, so I have come to the end of my live stream today. So I hope you enjoy this session and find some good insights, okay, and knowledge from today's session. Okay, all right, so I will see you guys again next week. So once again, if you enjoy, give me a like, subscribe, and also type V or value in the comments. So with that, thanks so much, and I'll see you guys again next week. Good night, 晚安, and bye bye.